We have just around 90 seconds here until the closing bell. We want to bring in our panelists. We have Morgane Delledonne. She's the Director of Research at Global X ETFs. And Morgane, just taking a look at today's action, we are still holding on to gains. We got that weaker than expected GDP print this morning. Jobless claims numbers missed expectations. Why do you think investors are able to shrug off some of those weaker reports?
Well, the investors are focusing now on what the Fed is saying and other central banks are saying, which is there's still a great deal of uncertainty. So there is no actually a clear outlook on where we are and a clear timing of the next tapering and the increase of interest rates. So I think what's really important to take away from what the Fed said earlier this week is that the focus will shift from the COVID-19 cases to the vaccination rate, which seems to be the differentiator factor in this recovery. And this will, I think, be really in focus for investors to time the next move, not only from the Federal Reserve, but also other central banks with regards to tapering and increasing interest rates. So lots of optimism in the market still because COVID-19 is keeping central banks from hiking as long as they see inflation being temporary.
Just a couple of seconds here until the closing bell. Again, we're looking at gains across the board. Dow, S&P, and Nasdaq all moving to the upside.
All right, we've got a closing bell. Let's see where markets are going to settle as we get ready for Amazon to report its quarterly earnings. And there you see it, Dow up almost 0.5%, the S&P 500 going to be up almost 0.5%. Nasdaq up just about 15 points. We will take it. And sector action today, some of the gainers, the leaders in the sector, financials up more than 1%, materials up 1%. Want to let you know, too, that we have Victoria Green, CFA, Chief Investment Officer, joining us from G Squared Private Wealth. And let's start with you, Victoria. I want to ask you, as we get ready for Amazon, as we look at the earnings juggernaut, these markets seem to know no limit, although some analysts have told us 4,500 for the S&P, that's it. What do you think?
I mean, obviously, we're hitting a weak seasonal period in August and September, so you got to kind of keep your eye on that. Everybody, as you guys pointed out, is watching the Delta variant and to see if that's going to derail things and how much that might slow down some commerce. But quite frankly, looking at earnings, Q2 was fantastic. Everybody kind of shrugged off the bad GDP number today. It didn't really matter. Now we're just looking forward. You know, looking at Amazon, I think it's a little bit of a risk. Other than Google, nobody really saw a good pop from great earnings. You know, you saw Facebook struggle because they said, hey, we might have peaked out on our users. You saw Apple struggle even with its record revenues, though it got a little bounce back today. You know, Amazon, I think, could report blowout numbers and people are going to be worried. But yeah, what are you going to go do for me going forward? So I'll be very curious how the market reacts. And we're all expecting a blowout quarter. I mean, who didn't like spend half their paycheck at Amazon the last few months?
I certainly was guilty of that. I've been guilty of that for the past couple of months. Victoria, let's also talk about Robinhood, because we saw Robinhood under pressure today, off just around 8%. There was lots of hype going into this public debut. What do you make of just the investors' lackluster reception to this name and what this means for the company going forward?
Yeah, and I think you saw a little bit this morning when they tried to sell a third of the shares to retail clients, and the retail clients were like, maybe not so much. That was the first kind of canary in the coal mine. I mean, it wasn't a terrible debut. Look, Uber struggled their first day too. But I think Robinhood, again, is similar to almost what I would call like an Apple effect or a Facebook effect. They're going to worry about what's their volume going to be going forward. I mean, look at this. Crypto's come off the high. The meme stocks are kind of settling down a little bit. You know, there's still plenty of chatter in Reddit, but obviously it's a little less crazy than what we saw earlier. So I think people are questioning how that revenue model is going to work going forward, especially as more and more firms, and the big boys haven't really gotten into crypto trading yet, but as more and more brokerage firms come online in crypto, is Robinhood's model quite as protected? You know, they do have a very good spot there with the younger generations. But at the same point, I don't think they're going to hold on to them forever. I think people are going to continue to try to move in and pressure that space. So I think you saw today skepticism about how Robinhood's going to perform going forward, as well as they were kind of the counterculture brokerage platform. And now that they're public, are they really counterculture anymore? If you're a young millennial or
Right.
Gen Z, are they really cool anymore?
Morgan, want to turn attention as we wait for these earnings. The fact that the 10-year, the yield is essentially flat, not moving anywhere. And if you're looking for yield, I mean, if you want to get some return here, there are different strategies that you're advising clients. Are you telling them to look at REITs? Are you telling them to look at tax-advantaged limited partnerships? Which would it be?
Well, it's a very good question, Adam. Where do we hide in this environment with low yields? So what I would suggest is to look at more of a defensive approach with growth component, and I think thematic investing is a really good place to start. When you look at themes such as biotechnology, genomics, they are very well positioned, I think, in this status quo where we're not really sure if there is we're not sure about if growth will continue to accelerate or if will be more of a stabilized growth. And in this environment, having a little bit of defensive component in your strategy combined with a tech component that is with high growth, I think is a good mix to kind of cope with this very uncertain environment.
Victoria, when we talk about the uncertain environment, I think lots of investors are trying to best gauge, I guess, how to read the latest developments that we've gotten on the Delta variant, what this means for the economic recovery going forward. From your perspective, how do you think the market is looking at this?
I think the market's looking at it a little bit longer term. I don't think you've seen it really react strongly. I guess last Monday is really the only time that you saw markets really look at this and say, ooh, it might get a little scary here. So I think, quite frankly, yes, we are concerned a little bit. September historically is a bad month, seasonally wise. August is not a very strong month. A lot of people go on vacation, volumes drop. So a little bit, if you're looking at the market August and September, I'm not sure we're going to necessarily see a huge push up. I could see us go sideways or potentially even trend down a little bit because, quite frankly, you haven't seen a lot of stocks have a lot of great upward moves and great upward momentums because of good Q2 earnings. And that's a little bit, I think, of a surprise. You've seen a lot of really, really strong earnings just blowing expectations out of the water. And the market, quite frankly, was like, we've seen that before. Now we're worried about what's coming next. So certainly everybody's looking at Delta variant. I think there's a little bit of hope in the markets that this might scare people into getting vaccinated and let's not all shut down again. So, you're seeing stories come out that maybe Mississippi and some of the other states, Alabama, that are lagging a little bit on the vaccine rates, that they may start coming around, and they're starting to see more vaccine appointments as this has started to come back. A little too late for some people, but hopefully this might spur a second round of people getting more serious about vaccination.
Hey, let's bring Dan Howley into this. We have Amazon earnings and shares are trading down after hours. I bet it's that revenue miss, right? Dan, you're muted.
Sorry about that. I shouldn't be muted. Can you hear me now?
Yep.
We got you.
Okay, we have a revenue miss of $113.08 billion. The expectation was for $115.06 billion, so a miss there. We have AWS revenue beat, though, with $14.81 billion versus $14.18 billion, so a little flip-flop there. And then there's also concerns about the coming quarter, Q3. Estimates were for guidance to be around $118 billion, but now Amazon is projecting net sales of between 106 to 112 billion. That was one of the worries that analysts had going into this announcement, was that there would be a slowdown potentially in the e-commerce side of things. And that seems to be what's playing out here for Amazon in the coming quarter. This is obviously going to be the first quarter that Andy Jassy is CEO, with Jeff Bezos stepping down last quarter. Now he's kind of gallivanting in space. And Amazon obviously facing a lot of headwinds from regulators as far as antitrust goes, as well as that MGM acquisition that's now being looked at by the FTC. So a lot of stuff going on here for Amazon, but the big news is that miss on the forecast for Q3 and for revenue in Q2.
And certainly we're seeing the shares reflect that here as we pull up the chart. I believe the stock is up just off around about 5%. Yep, you can see it on the screen right now. Morgan, when you take a look at a big name like Amazon missing expectations there, clearly we're seeing it reflected in the share price after hours. Just what this means for the broader market. What's your read on that?
I think so far the earnings have been pretty strong, but the most important thing is the guidance. And looking at what's going on with COVID-19, it's definitely challenging and what's happening on the supply chain for manufacturing, like with shortages in basic materials, and for services, the shortages in labor may be one of the key challenge for the next quarter. So looking ahead, I think Amazon and all the other online platforms have really gained in terms of number of users during the pandemic. The pandemic has generally been very successful as an accelerant for most of the tech themes in their adoption among users. But looking ahead, what we will be looking at is potentially some consolidation around the gain during the pandemic, because as the economy reopens, people will gain other options than just going online to shop, to entertain, etc. But the gains during the pandemic should be somewhat sticking.